based in Germany and doing a lot in implementing these green projects, to first make a welcoming remark and also introduce the panelists and the moderator for this session. And I wish you a very successful session. Thank you very much. So Matthias, you have the floor.
Thank you, Nitin. And I think Masamba is not here at the moment, but also to Masamba to had the chance to realize this interesting panel. Development banks and organizations are or play an important and perhaps decisive role in the realization of green projects, I think. Many of these projects are breaking new ground, are innovative, but the business model is not yet tried and tested. Without the valuable commitment of the development banks and organizations, many projects would not take place. On the other hand, the funding criteria depend on the priorities of the respective governments, and it is difficult for many to understand the structures, and the effort involved in handling the funding projects is almost impossible for many, especially, and we have some experiences with this, for innovative small and medium-sized companies. We are very delighted to have development banks from not all over the world, but from many regions here, from many regions of the world. And I would like to introduce the panelists. And before I go to the panelists, I want to introduce Diana Schröter. She is also with Venture Partners and will moderate this panel. Welcome to Diana Schröter. And then I invite Jürgen Kern. He is Chief Sustainable Officer of the KfW Group, also based in Germany. Then I invite, and I hope it's correct pronounced, Olatunji Tusuf. He is lead climate adaptation specialist of the Islamic Development Bank. Esmira P. Javier from the Asian Development Bank. Welcome to the panel. Edward Okot Omoya from the East African Development Bank and also member of the UNFCCC Steering Committee. Welcome to you, Mr. Omoya. And last but not least, Mr. Gregor Sahler. He is from the GIZ, Competence Center Climate Change. I'm very much looking forward to this panel. Wish you a very fruitful discussion, but as I know Diana Schröter, she will handle this. And good luck and have a good time here. Thank you very much for joining us.
Thank you again. Welcome everybody in the room. Welcome to the panelists. And without further ado, we go into the questions, and we dedicated ourselves to, we have prepared questions. We have, of course, the panelists who are knowledgeable give you their views, their insights. But of course, we also want to try to make this a lively discussion. So if there's comments, also comments from you afterwards. Of course, this is 45 minutes where we give you some insights and input, but feel free to ask your questions later on. You see the panelists, ask them, speak to them later if you have more specific questions. Okay, then I'd like to start first with you, Mr. Omoya, and give the first question to you, because I think it's a fair statement to say that green projects are often capital intense. And one of the barriers, not only, but in particular in developing countries or least developed countries, are high interest rates. What innovative financial instruments could help elevate this barrier? And maybe you can give us an example of how such instruments have been used by your organization to finance green projects.
Thank you very much for giving us this opportunity. The East African Development Bank is a development financial institution based within the East African region. We operate in Kenya, Tanzania, Uganda, and Rwanda. We support the SMEs because we know it's only through the SMEs that we can make an impact. The bank has been operating since 1967. We also host the UNFCCC through the collaboration, and we have the RCC East and Southern Africa hosted at the Kampala office. So we know the issue of credit. The incentives are needed. We cannot finance climate projects without the rightful financing. The incentives which are needed to catalyze this include the following. We need the blended financing. Without blended financing, we cannot support our partners. We have these partners who cannot, our clients who cannot afford financing. So if you give them at the normal financial rate, at the normal 2-digit interest rate, they cannot really get the money from you. And that affects all the partners, partner financial institutions within the middle income countries and the developing countries. So we need to also include the guarantees. The guarantees will come in to support our operations in the region. The next one is the crowdfunding platforms. If we introduce crowdfunding platforms, we'll be able to support our clients achieve the global climate goals. Not only that, there is also carbon credit financing. This is a new area. Carbon credit needs to be an instrument that should be really utilized properly. The only challenge now is the capacity building. We need to first build the capacity of our clients to know how they can tap into this potential. It's a very good potential, but how can they tap into this potential? How can the development partners, how can the development financial institutions benefit from such? We also have the climate risk insurance. We have a number of insurance companies who are willing to support. We know the high risk that comes with climate projects. So without proper insurance cover, and there are very few insurance companies that can really take the risk of covering projects of this nature. We know climate projects are really risky. So for us to ensure we get the right insurance companies to cover, because of the perceived risk, Africa is already looked at from the global north, and also the real risk that we have, the credit risk we have, the financial risk we have within the region. So there is actually need to get the rightful insurance companies to come and support our initiatives within the region. We also have the impact investing and the public-private partnership. So these are avenues that we can use to help us ensure we propagate these climate initiatives. In the bank, we have tried, though not to the full breadth and scale, we tried to utilize some of the instruments internally. We came up with the SGR project. The SGR project is a project in Tanzania whereby we came together with a number of financial institutions, both international financial institutions and the other financial institutions to support, because we know the importance of that kind of project. It's a clean energy project which will reduce on the carbon emissions within the region. So the bank is supporting this project in a way that will help catalyze the climate action. We also introduced a biodiversity investment fund in Uganda. The biodiversity investment fund, among others, is to support clients at a subsidized rate to get money for renewable energy, for organic agriculture, for forestry and non-forest products, for tourism and ecotourism, and other related biodiversity initiatives within Uganda. The hope is that on the successful application of the fund, we would scale it out to cover the entire East African region. And the money was got from our good partner, KfW. So we are grateful to KfW for the support offered in the implementation of the Biodiversity Investment Fund. Thank you very much. And we also have a new product, the SME product within the East African region. We launched it. The first one was launched in Kigali, Rwanda, the second one in Nairobi, and then the third one recently in Kampala, Uganda. So we also intend to roll out the product in the entire East African region. So thank you very much for giving me this opportunity to discuss on this panel. Thank you.
Thanks a lot. So many. I mean, I asked for one example. You gave so many. Thank you very much for that. Very, very interesting insights. And I think a lot more to discuss on the crowdfunding and everything that you mentioned, to worth going deeper within. Just as an advice, whoever wants to know more about these things later on. Ms. Javier, I would give the next question to you. How effective, and I mean, it nicely pays into what we already heard, how effective do you think are MDBs in financing green projects compared to national development banks or agency, or also private institutions?
Good afternoon. Good afternoon to everyone, and thank you for the invitation to join this panel. I wouldn't say effective would be the word to describe MDBs. You know, if MDBs are more effective compared to national development agencies, governments, or private institutions, but I think we do have an advantage in several factors, right? One is, of course, obviously financing. So in addition to what the colleague here has said, you know, there is scope for guarantees, but we also have equity investments. We also have loans. So we have an array of financing instruments that our clients, as well as the private sector, can actually tap. That's one. Two, in addition to financing, we do have some expertise in terms of helping our client countries and other stakeholders to actually create enabling environments. Because in addition to financing, I think there has to be environments or policies that are set in place for private sector to incentivize private sector to actually come in and invest in certain technologies. But I think one or two critical factors that set MDBs apart is that we do create instruments and frameworks or initiatives that actually try to overcome some of the risk that are being faced by private sector. Just to give you an example is the Canadian Climate Fund for the private sector in Asia, which obviously is being funded by Canada, actually offers financing in concessional terms and condition to projects that would not proceed solely on a commercial basis, thus helping the private sector overcome development risk, including market risk, technology risk, as well as financing and regulatory risk. So that provides an opportunity or an advantage from our point of view. Now, another part of it is really an initiative that we have internally is what we call the ADB Ventures project, it is a venture capital arm of ADB, which is supporting early stage technology startups with high potential to scale up and deliver climate impact in the Asia and the Pacific region. So it targets around to mobilize 1 billion of risk capital. Now, it is relatively young in terms of the VC space because it was only established in 2020. And of course, you know, initially there was hardships and challenges, but 90% now of its portfolio are actually related to climate change mitigation and or adaptation project. And 25% of that portfolio are actually being led by women. So each of the projects are actually evaluated through a gender lens as well. So that's the innovative feature of that venture capital. Now, just to say a little bit about ADV Ventures is that it actually focusing on clean tech and clean energy, sustainable agriculture, sustainable supply chains, and resilient communities. So these projects are not only look at the commercial viability, but again, the potential for it to being scaled up. For example, in the Philippines, there is a project that actually translate pineapple plantation waste to leather, which is now actually being used for handbags, footwear, as well as for interior decoration. So that's another element that we have provided. But just to answer directly your question about if MDBs are more effective, I think MDBs can only be effective if they actually work together with these national development institutions that provides the connection at the national as well as the local level, but at the same time working with governments to provide those enabling environments. And of course, private sector, especially SMMEs, has the potential to actually generate the critical change at the community level. So it's to be effective is to collaborate across different sectors, upon different institution, national and local level. But yes, we do have those advantages and we provide this to the client countries as well.
Thank you very much. So actually, that's a nice segue into one question I had, and I would maybe give it to you. I'm allowed to say TJ. So we thought about it would be maybe a radical statement, but actually I think it is not, from what I'm hearing, that radical collaboration maybe is actually exactly what is needed to finance green projects, and radical collaboration between private, between national, between MDBs, between the agencies, between the banks. So maybe you can give us a little bit your perspective on, actually, would you agree to that statement? And can you maybe tell us a little bit more how you think that could be done?
Okay, can you hear me?
Yeah.
Thanks a lot, Diana, and good afternoon. And it's a pleasure to be here. And sincere thanks to our colleagues from the UN Climate Change Global Innovation Hub for inviting us to be part of this very interesting conversation. We live in interesting times. If you've really followed the green bond market, you will see that there's been a lot of growth over the last couple of years. That is something that is quite good. And if you look at most of the countries, there's also an increase in the number of green finance that is actually getting to countries, although it's not up to the ambition level that we wanted to get to. But I can say, compared to what we had 10 years ago, I think we've made substantial progress as a community. That actually has its own challenges. And the predominant of these is actually the fact that you have an ecosystem that is highly fragmented, where you have numerous stakeholders go to a country, you have different stakeholders working on different things, even though they're all interrelated. And that creates a lot of problems in the sense that you can go to a country, you have the MDBs there, you have bilaterals there, you have the private sector colleagues there, you have even community-based organizations that are working on green projects. But then in the end, you realize that sometimes there's always a lot of duplication that happens in certain places. So that actually makes it clear that there is a need for radical approach when it comes to the way we collaborate, particularly in countries. And as MDBs, we're always a believer in the fact that you can't use the same level of awareness that created a problem to solve that same problem. And as a result, MDBs, we came together and decided, as part of our statement earlier this week at COP, which is something that we've been working on over the past years, which is around country platforms. So it's an approach that says it's not just going to be MDBs that will be working in a country to help drive that transition that we want, whether it's actually through what basically Esmera and colleagues have mentioned around the various financing modalities that we provide. But also, is there a way that we can leverage the strength that we have? We have a very strong convening power as multilateral development banks in all the countries where we work. But also, we know that there are a lot of players there that are also doing very great things that we need to collaborate with. So having a platform within the context of these countries would be a very good starting point for us to be able to actually have a block approach, like a very, very, very blocked, unified approach to be able to actually address one of the critical challenges that we have, which is advancing effort towards that low net zero future. But not just that, but also there's also the resilient side. I'm always very biased towards climate resilience. So the green is not just about the emissions reduction aspect as well. So it is within this same conversation that MDBs are working as a system, which actually came strongly from the statement that was released by all of us, to say, we're not going to work in silos. We're going to work, bringing all our different capacities, bringing all our resources to see how we can use that to also leverage and capitalize within the context of the countries where we work. The good side is the fact that as MDBs, one of the benefits is that we have some level ability to take certain risks that private sector players will not be able to take. And we've seen that in quite a lot of projects that we've done. But we don't want to do that in silos. So a platform approach, we do feel that that's one radical way that can really help to solve this problem. That would help actually to solve and address the issue of duplication that we continue to see, but also it will help to actually address redundancies that we find in quite a lot of places. But also is the fact that it helps to bring that bulk finance that is needed, mainly to de-risk. Because without de-risking, then you can't find the private actors playing there. So, and we see that there's a lot of significance that that can play. And we look forward to many years where we'll be able to actually work together and do some of these things. Now, at the level of the bank, what are we doing to help actually also advance some of these things? We have several initiatives. We know domestic markets are usually the places where we foresee that the real transformation will happen. It's not the big money that comes from us. Yes, we have the big money as MDBs, but that's not where it's the private sector that will provide the bulk of this money. And the bulk of that will come from domestic market. Now, you find out that in quite a lot of countries, the domestic market is actually not as developed as the level that you want it to be for it to be able to advance quite a lot of, especially in developed low and middle income and emerging economies, they're doing quite well. But low income countries, I think it's quite a lot of challenge. So as a bank, one of the things that we do is actually to work with market regulators to see how they can also develop some of the frameworks that is used within those markets. As a bank, the benefit that we have is that all MDBs are AAA, so we use that as a leverage. But also we use that expertise that we have within the market, in the global capital market, to also work with local actors within the respective market to see how they can also leverage that expertise to be able to also expand the base of their market to mobilize much more green finance. And those sort of things will come from, as Mira rightly mentioned, capacity-related activities, some sort of policy reform. Some of MDBs would work on some of those things. But largely, we see them more in the place of ensuring that they have frameworks that are very clear, that meet those standards that are required at the global level, that is very predictable for investors that will be putting money into those different issuances that they will be making. We do have smaller projects, like some of the MENA link projects that are covering MENA region that we're doing with the German government and quite a number of colleagues from Guidehouse and a number of folks. Those are helping to transform regional level kind of scale of progress that we want for green, particularly in the area of renewable energy and things like that. So as a bank, the last thing that I want to talk about is around the place that having an inventory of all solutions are out there and where they are and who can provide them. That is very key. Sometimes you discuss with countries and they say, oh, we want to do this, but we don't have the solution that will be suitable and contextualizable to our country. Now, one of the things that the bank is doing is to actually have a very broad across our member state to look at mapping of those solutions. And we're working with different stakeholders to do that. So these are one of the approaches that we feel that can be very helpful in also enhancing collaboration, because then you know the stakeholders, you need to know them first before you can collaborate with them. And that can have a very transformative effect, not for the very big banks, but even for the people at the very, very local level, where the real transformation that we all yearn for stays. Thanks.
Thank you very much. So many insights. I mean, mapping of issues you mentioned global frameworks, but also being effective locally. Maybe I can give it to you, Mr. Khan, and you can tell us your view, or you can give us your view about how you see MDBs and foresee their future and what role they're playing and helping in the future.
Aha, okay, great. There are so many experts on those topics. So I want to add something that was not said already. First of all, KfW is not an MDB in the proper sense. We are a national development bank. Before we came into this meeting, we had a conversation with your colleagues from a project developer, and they said this project will save that number of millions of CO2 emissions. And I like this very much because I think we as the financiers, and this includes national development banks and MDBs, have to focus very much on impact. And actually, this is what we did for the first time. We calculated the impact of our commitments of last year. And we can say we saved 12 million tons of CO2 equivalents with our commitment. So I believe, because everybody is saying finance is the bottleneck, we have to focus much more on the impact with what we achieve. So I absolutely share what the others said. We need much better cooperation. So KfW has joined a network, or founded actually a network, which is the International Development Finance Club, and and this is national development banks, not competing with MDBs, but coordinating in our context. And those banks have 4 trillion assets under management. And we are committed to implementation of the SDG and the Paris alignment. Members are the Agence Française de Développement, BNDES, BOAT, and KfW, just to mention a couple. We are much more. So I think this is one part of the role for the MDBs or for the national development banks. I would also mention, if you allow something else, I believe that we as KfW, and maybe this can be also a discussion for MDBs, we not only have to be a financier, we also have to be an enabler. So in the last year, we engaged a lot in bringing people together. We have had the Hamburg Sustainability Conference. We signed a cooperation agreement with World Bank exactly in order to ease the process of project approval, to have the same procedures, not to do everything. If you have a couple of donors together or financiers together, to do 3 times the same impact analysis or environmental social assessment, etc. And we did for the second time at the COP something new to us. We have a partnership with Potsdam Institute for Climate Impact. And as you talk about innovation, if you allow me to mention it, we have published a study together with them in order to integrate carbon removals into the existing emission trading system, which is somehow a controversial discussion, but we believe that it is very important to have this technological advance on these technologies. So instead of buying emission reduction or rights, companies, financiers, whatever, could invest in this technology and afterwards profit from the carbon removal technologies. So I believe, coming back to your question, what can be a role of the MDBs or the national development banks, I don't make a difference on that, is also to focus on this enabler role, except of coordination, which of course is absolutely important, and to focus more on the impact, what we are doing. Just for the moment. I have also examples if you want, but I can bring them later on.
If you can give us one example, that would be nice, but I would have one additional question. Would it also be fair to say it's not only enabling, but even advising, that you are an advisor? Because sometimes I have the feeling, just through the conversation, through the discussion, through the questions, but also through your requirements, maybe, that one actually gets advice and idea of what do I have to fulfill.
Yeah, you can name it as you want. I would prefer enabler,
because advice, who are we that we can advise throughout the world? So I would prefer, we want to bring the people together. We want to be the enabler. We would like to start with us first. So we talk about our impact. We want to get our data right. And it's not so easy to calculate the carbon emission reductions of your portfolio or of your commitments per year. I would say, let's call it enabler, with what I feel more comfortable. Now coming to my example. That what I brought to you, that's the Emerging Market Climate Action Fund, and I believe this gives a good example on how you can implement this. And at the end, you can reduce these problems to the question for renewable energies, or for, especially in those countries, you have to have a risk return profile that is adequate. That's always the same question. I mean, we're discussing super complicated models, but at the end, you can reduce it to one question: what's the risk and what's the expected profit? So in this concrete project, or in this facility, we have created a junior tranche, what you need to get the adequate risk of 130 million, and the senior tranche of 260 million. The junior tranche is coming from what you would call MDBs, or national development banks, KfW, Nordic Development Fund, Luxembourg, UK. And the senior tranche is coming from Allianz, Volkswagen, and EIB. And we can mobilize with that 10 billion of US dollars. And this is the leverage that we can have if we choose those models. So how does it work? All the sectors, mitigation, adaptation, environmental measures can work. It has to be in OECD DAC countries. 25% has to go to sub-Saharan, to Africa. And this is a fund of fund. So I think this is a good example, and we need much more of those examples, because the leverage that we can achieve, I believe this will bring really, will be a game changer.
Thank you very much. Then I would love to hear, or we would love to hear a little bit more about carbon pricing. We touched it a little, and we heard it every now and then already. But a specific question would be to you, Mr. Sala. How effective do you think carbon pricing mechanisms are driving investments in green projects? And a second related question, I think, do you think additional cash flows generated through that are incentive, are an effective tool and an incentive for green investments?
Thank you very much. First of all, I feel extremely honored to be on this panel, because I'm representing not only not an MDB, I'm not even representing a bank. So I'm with GIZ. GIZ is implementing so-called technical assistance, technical cooperation in many countries. We are around 25,000 people, and the bulk of that in our country offices around the world. Now getting to your question, and excuse my voice. So I think, as Myra already mentioned at the beginning, to incentivize private sector. Jürgen just mentioned the removals questions to bring that under the ETS, under the emission trading system sometime in the future. So why do I think that carbon pricing matters? Firstly, one differentiation, which I think is very important to make, because also carbon crediting was already mentioned. So there are two different approaches that work under a bit of different paradigms. We have the carbon credit mechanisms that basically issue credits based on climate projects. And then, on the other hand, we have these direct carbon pricing schemes, usually taxes or usually emission trading systems. So there, you are more or less punished for the emissions that you emit. In that sense, it creates incentives for the private sector to reduce emissions, and it changes the risk and return equation, in the sense that green products, green technologies become more competitive on the market compared to brown technologies. In addition to that, we know that it works. It's one of the few climate policy instruments that we have very good evidence that it works. Again, the already mentioned Potsdam Institute just recently published a study with others at Science, where they looked into 1,500 policy packages or climate policy packages around the world. Only 63 had a measurable, valuable impact on reducing emissions, and virtually all of these 63 had a pricing element to it. So now the last question in that sense is, how do we make that work for low and middle income countries? Because so far it's widely spread in industrialized countries. The CBAM is around the corner, which is a different topic to discuss. But 80% of the committed emissions will come from low and middle income countries. So we know there is a tool that works, and we know also we need to manage emissions in low and middle income countries. However, for very good reasons, there is a lot of skepticism and resistance. One of the reasons about a lack of acceptability is the social impact of carbon pricing. So I think we need to talk a lot more about that, come up with good also models how to do that. One thing is that with those domestic revenues mobilized through carbon pricing, that it's highly relevant to use that also for actually investing into green technology, green projects. However, that is still not sufficient, because that still doesn't change the point that often the access actually is lacking to those greener alternatives, because of, among others, higher capital prices in those countries. So we are doing a lot of work on that in GIZ in many countries. Uganda, for example, we have been working with on specifically on distributional impacts of carbon pricing. Yeah, so happy to talk more about that if time allows.
Okay. Yeah, I think it does allow for at least one more example or one more input that we have. Looking at the time, so we would definitely have the time for one last comment from each of you. If there's a specific point you want to raise, or something that you want to get across to the audience, if you had one advice or one thing that is top of mind, we definitely have the time to do that. If you have a final comment. Anybody who wants to add something because of what we just heard about collaboration or other aspects? Yes, sure.
Sorry.
Ms. Javier first. Yeah. And
Ladies first, I guess.
TJ second.
No, just taking off from the two gentlemen's, from Jürgen and Gregor's inputs here. So we're talking about, DFIs, MDBs as enablers, right? But I think private sector itself can be, especially on the adaptation side, because as we know, most of the climate finance that flows are normally in the mitigation projects. But globally, private sector actually contributes 49%, according to the Climate Policy Initiative's Global Finance Landscape, to the climate flow. So 49% actually comes from the private sector. So there's great potential there. There's great potential to scale up financing. Now, when we're looking at adaptation, there's very little money flowing. We don't need to even discuss about the gaps. But for private sector, they are also enablers for technology. There are also financiers for finance, but I think private sector are also adapters. They have to adapt their portfolio and their operations to the impacts of climate change. And I just wanted to add that. And I also wanted to add about carbon pricing and carbon markets. At least ADB obviously believes that carbon pricing has the potential to actually accelerate the market in terms of investing on climate change projects and climate change activities. Now, but I think what's critical is to provide two things. One is capacity building, especially for Asia and the Pacific, developing member countries, and we have a number of them, actually wants to participate in the carbon market scheme. but they don't have the capacity to do that. And that's why we have the Article 6 support facility to specifically address that. Now, at the same time, at least from ADB side, we also established the Climate Action Catalyst Fund, which means that we're using the carbon markets to buy credits, and that investment and the money is actually invested in climate mitigation projects. So that provides a startup for some of the projects using carbon markets to scale up mitigation actions and on the ground. That's it for now.
Thanks a lot, Esmera. I just want to, I'm going to shift a little bit to talk about some of the things that we are seeing. So I'm going to speak for one from the perspective of someone that works so much with colleagues in the capital market a lot, particularly on raising green bonds and green sukuk and things like that. But before that, I just wanted to also add to the point that Esmera made earlier, which is around the work that MDBs are actually doing, is to say that just at this COP, which I shouldn't be saying that because considering that Esmera, they are the chair of the MDB group, that should be coming from her. But it's the fact that collectively, MDBs, we made an announcement of 120 billion towards climate by 2030. And out of that, we anticipate about 42 billion is going to be for adaptation, with the hope that 65 billion is going to be mobilized from private capital with that. Now, that is a good number, but then there is a whole lot that goes into that number. One fundamental aspect is around the fact that that number will never be achievable unless we have those bankable investments that are designed in a way and manner that aligns with those green objectives coming from our client countries, whether it's from the private sector, whether it's from the line of credit that we provide, whether it's even from the guarantees that we provide, or whether it's even from the loans and different, whether it's the policy-based lending that we provide as MDBs. So the key point that I just want to emphasize here is around that all hands must be on deck at every stage, right from the point of where initiations are happening in country. And I don't know the number of country representatives that are here. The challenge that we have often seen why we don't find a lot of successful projects coming into our institution is the fact that when you look at the conversation that happens at the Ministry of Planning, or whether at the level of the Ministry of Finance, sometimes, I'm not generalizing, in some countries are well established, those processes are quite clear, where you find some of these very clear-cut policies being part and parcel of the planning process within the countries. But I can tell you in quite a lot of countries, that's usually not the case.
But what does that mean for, oh yeah, you wanted to add something, but my question would have been, what does that mean for, let's say, me as a project owner? So what would be the advice to the specifically project owner, not to the country level maybe? But happy for you to also add your comment.
You want me to respond to that? So now, the question is, what does that mean for a project owner? It means a lot. One is the fact that there is a higher chance that you will get more MDBs that are willing to actually finance green investment. Meaning that if you don't have a project that is typically green, it's not greenwashing, clear-cut green, then the chances that you may get MDBs or financiers getting towards that might be challenging. But then that does not mean the end of the road. What MDBs are actually offering, which was what as Esmera also mentioned, is around we're beginning to work with different clients, whether it's our private sector, whether it's our financial intermediaries, to look at how we can help them to enhance their capacity to be able to design those green investments. We're not just telling you to bring green, but we're working with you. It's a journey. It's like a partnership for us to be able to do that. So that's one area that MDBs are really, really working at to see. One last thing that I want to talk about is around the fact that beyond just the capacity, is around how do we even transform the whole system through some of the long-term strategy that is part and parcel of the system. And that's one program that I don't know if Esmera will want to talk about it later on. It's around the LTS program that the MDBs are working on to see how we basically make it a part and parcel of the whole of a system approach. I'm going to stop there. Thanks.
Thank you very much. Yeah. You wanted to add something?
Yeah, thank you. I just want to absolutely underline the importance of adaptation finance. That's totally neglected. We are light years away from getting somewhere close to mobilizing the amounts of funds that are needed for that, and that is partly because there are no viable business cases for private sector. So obvious, let's say. So the challenge there is even much greater than we are talking about mitigation. And the second point about Article 6 or carbon credit schemes, I think there are really huge opportunities. However, I also think we really need to collaboratively get it right, because there are also challenges to that. One challenge is countries really need to have a clear strategy of what kind of mitigation outcomes, for example, they want to sell, and what kind they want to take on their own, because it could easily happen that they sell off the relatively easy to achieve mitigation outcomes and are then left for their own NDCs with mitigation outcomes that are much more costly to achieve. And another thing is, of course, the whole debate about credibility and the quality. And there also, it's absolutely key to get that right, because you can only get it so many times wrong before the idea and the markets are spoiled.
Thank you very much. So I'm always checking, so we didn't get angry looks, so we definitely have time for a last comment.
Yeah, I would just wanted to like to sum up, because I've seen so many excellent examples. And I think we probably, to bring the private sector in and to have this huge leverage we can achieve, and that's a good news, we need less government subsidies, so less money needed, especially in the partner countries, and we need more and better market regulation. So if we get the market regulation right, I think we get with just what I said, patient capital, local expertise, etc., we will have a huge leverage, and it's a good opportunity we should use.
Great, thank you very much. And I think this is the end of our panel. I'd like to thank you very much for all your insights. I mean, it was expected that this is going to be rich, and it was. So thank you very much for all the also concrete examples. I think this was not only high level, but I liked also the details. So, and I thank you very much again. Thank you very much for having us here on stage, and thanks. That's it.